Hey guys, welcome back to the channel. In today's video, I'll be sharing with you my trade like a stock market wizard summary. And in this video, I'll be sharing with you Mark Minervini's trading strategy, such as Mark Minervini's trend template and Mark Minervini's SEPA strategy, and some tips and advices that you can use in your own trading in the stock market. So make sure you stick around in this video so that you don't miss out on any of these lessons that I believe that can help take your trading to the next level. The first thing that we'll take a look at is Mark Minervini's trend template. Before we take a look at the specifics of Mark Minervini's trend template, we need to know a few things first. And the first thing is that we only want to trade with the trend. We only want to go long when the stock is on an uptrend and go short when the trend is on a downtrend. And when we are going long in the stock market, we ideally want to enter a long position in the stage 2 uptrend. What is a stage 2 uptrend? Let's take a look. Mark Minervini points out that there are 4 stages in the stock market cycle. We have accumulation in stage 1, uptrend in stage 2, distribution in stage 3, and downtrend in stage 4. Those are the 4 stages in the stock market cycle. Mark Minervini mentioned that preferably we only want to enter a long position in a stage 2 uptrend. The next question is then, how do we determine a stage 2 uptrend? This is where Mark Minervini's trend template comes into play. There are 8 steps to Mark Minervini's trend template. The first step is that he wants to see the current stock price above both the 150-day moving average and the 200-day moving average. And for the second step, Mark Minervini wants to see the 150-day moving average above the 200-day moving average. And for the third step, the 200 moving average to be trending up for at least a month, preferably 4 to 5 months. And for the fourth step, Mark Minervini wants to see the 50-day moving average above the 150-day moving average, and for the 50-day moving average to be also above the 200-day moving average. The fifth step is for the current stock price to be above the 50-day moving average. And for the sixth step, Mark Minervini wants to see the current stock price to be at least 30% above its 52-week low. The seventh step is that the current stock price to be within at least 25% of its 52-week high. And for the last step, the eighth step, Mark Minervini wants to see that the relative strength ranking in IBD or Investors Business Daily to be preferably in the 80s or 90s. So those are the 8 steps in Mark Minervini's trend template. This is the price chart for Apple, and let's take a look at whether the Apple stock fulfills Mark Minervini's trend template. Before we start, the dark green line on our price chart is the 50-day moving average, the light green line is the 150-day moving average, and the red line is the 200-day moving average. Okay, now let's take a look at whether Apple fulfills Mark Minervini's trend template. Let's bring on the 8 step to Mark Minervini's trend template over here. So the first step is for the current stock price to be above both the 150-day moving average and the 200-day moving average. Over at this candlestick over here, the current stock price is above both the 150-day moving average and the 200-day moving average. So it fulfills the first step. The second step is for the 150-day moving average to be above the 200-day moving average. So this is the 150-day moving average and this is the 200-day moving average. So it fulfills the second criteria. For the third step, we want to see the 200-day moving average to be trending up for at least a month, preferably 4 to 5 months. Over at this candlestick over here, we are at the late part of December. And you can see that over here, the 200-day moving average has been trending up for the past couple of months. So it fulfills the third step. For the fourth step, we want to see that the 50-day moving average is above the 150-day moving average and the 50-day moving average will also be above the 200-day moving average. So over here, you can see that the 50 is above the 150 and the 50 is again above the 200-day moving average. It also fulfills the fourth step. The fifth step is for the current stock price to be above the 50-day moving average. So we have the current stock price over here, which is above the 50-day moving average. So it fulfills the fifth step. For the sixth step, we want to see that the current stock price is at least 30% above its 52-week low. We had the 52-week low around this point over here. And right now, the current stock price is at around this level over here. So we can safely say that the current stock price is at least 30% above its 52-week low. And that fulfills the sixth step. The seventh step, we want to see that the current stock price is within at least 25% of its 52-week high. We had the 52-week high at around this point over here, and right now we are at this point over here. So we also can say that the current stock price now is within at least 25% of its 52-week high, and that fulfills the seventh step. For the eighth step, we want to see that the relative strength of the stock in IBD having a ranking of 80 and above. But in this case, I do not have a paid subscription with IBD. So I'll be skipping this step just for this example in this video. For all you guys who are watching this video, if you have a paid subscription with IBD, then you can access their website to see whether the stock fulfills the relative strength ranking in IBD. So we are just missing out on this one step in the trend template. That's how we want to use Mark Minervini's 8-step trend template. The next Mark Minervini's trading strategy is the SEPA strategy. The SEPA strategy takes a look at 5 main things: the trend, fundamentals, catalysts, entry points, and exit points. Now let's take a look at these individual components. Almost every super performance phase in stocks occur while the stock was in a definite uptrend, and we want to trade with the trend. And as we have mentioned earlier on in this video, we want to trade with the trend ideally in a stage 2 uptrend. And to determine the stage 2 uptrend, we can use Mark Minervini's trend template. Most super performance phases are driven by an improvement in earnings, revenue, and margins. and they typically occur before the start of a super performance phase. And during the super performance phase, there is almost always a marginal improvement of the company's sales, earnings, and margins. So not only do we want to see the fundamentals of a company improving before the start of a super performance phase, we also want to see an improvement in the fundamentals even during the super performance phase itself. For catalysts, there's always a catalyst driving institutional interest in the stock. It can be approval by the FDA, newly awarded contract, or even a new CEO. Whatever the catalyst may be, there will always be a catalyst which gets the institutional interest in that stock. The fourth component of the SEPA strategy is entry points. Most super performance stocks give you at least one opportunity and sometimes multiple opportunities to catch a meteoric rise at a low risk entry point. And we want to enter at such entry points which give us a good risk to reward ratio. And one way to determine an entry point for a stock is using the volatility contraction pattern. I have another video over here talking about the volatility contraction pattern by Mark Minervini, where I explain in greater detail on how to use the volatility contraction pattern. So the volatility contraction pattern is just one way to determine an entry point for a stock. The fifth component for the SEPA strategy is exit points. And this is an important point to take note. Not all stocks that display super performance characteristic will result in gains. Many will not work out even if you place your buys at the correct point. And that is why you must establish stop loss points to get you out of losing positions to protect your capital and limit your downside. In trading, you won't be right all the time, even if you have the best strategy out there. The best strategy out there can only give you a higher probability of success in the stock market, but it won't allow you to be right all the time. But the good point is this, we don't have to be right all the time to make money in the stock market. And the way to do that is when we are wrong in the stock market, we only lose a small amount of our capital. And when we are right in the stock market, we make more than what we lose in the stock market when we are wrong. And that is why the exit points component in Mark Minervini's SEPA strategy is so important. Because exit points helps us to protect our capital and limit our downside in the stock market. The third lesson is filtering stocks. In the US alone, there are hundreds and hundreds of companies. These companies may be in the S&P 500, the Dow Jones, or even in the Nasdaq. So with so many companies in the stock market, how do we determine which are the super performance stocks? To do that, we have to filter out stocks. When Mark Minervini looks at stocks must first meet the trend template to be considered a potential SEPA candidate. Right, so the stocks that meet the trend template criteria are then screened through a series of filters that are based on earnings, sales and margin growth, relative strength, and price volatility. And earlier in this video, we have talked about both Mark Minervini's trend template and Mark Minervini's SEPA strategy. So Mark Minervini uses a combination of these two strategies to filter out super performance stocks. Some of the fundamentals that Mark Minervini takes a look at for stocks when filtering them out are expanding sales and earnings. Mark Minervini also wants to see the stock being a leader in terms of earnings, sales, margins, return to equity, debt levels, and relative price strength. Mark Minervini's trend template is for the technical side of things, and his SEPA strategy is for the fundamental side of things. So that is how he combines the both of them to filter out super performance stocks. The fourth lesson is traits of super performance stocks. And these are some of the traits that Mark Minervini noticed in super performance stocks. They are decent earnings history, relatively young stock, and their small cap stocks. So for decent earnings history, decent earnings were already on the table for these stocks, and the majority of these super performance stocks already had periods of outperformance in terms of fundamentals as well as technical action before they make their biggest gains. And these super performance stocks also tend to be relatively young stocks, such as the first 10 years after their initial public offering or IPO. And most investors tend to shy away from these names because they have never heard of them. And this is exactly the opposite of what you should be doing if your goal is to find big stock market winners or super performance stocks. And super performance stocks are often small cap companies. Although occasionally a big cap name could see a surge in price after a turnaround or a period of depressed stock prices resulting from a bear market. But most companies have their high growth phase when they are relatively small and nimble. So these super performance stocks tend to be companies with a relatively small total market capitalization and small amount of shares outstanding. But a note of caution for small cap stocks is this. With smaller companies, it's important in most cases to confirm that they are already profitable and have proof that their business model can be scaled and duplicated. We do not want to trade in small cap stocks which have no proven business model and are unprofitable. And for the fifth lesson, Mark Minervini talks about some of the mindset or traits of successful traders. They are persistence, commitment, thirst for knowledge, and a burning desire to succeed. The difference between interest and commitment is the will not to give up. Because when you truly commit to something, you have no alternative but success. I believe when it comes to investing and trading in the stock market, most people start off being very interested in the stock market because of the potential gains that they can make. However, what they don't realize is that it takes a lot of hard work to generate the kind of gains that they see on social media and online. Right, so getting interested will only get you started, but commitment is what gets you to the finish line. So be it in the stock market or life in general, you need to be committed in order to have the success that you want. And for persistence, this is what Mark Minervini has to say. Persistence is more important than knowledge itself. Because knowledge and skill can be acquired through study and practice, but nothing great comes to those who quit. In fact, for Mark Minervini, in his early years of trading, he went a couple of years being unprofitable in the stock market. However, he had the commitment and persistence to stick with it, and has since become one of the most successful traders in the stock market. Mark Minervini also mentions that in order to succeed in the stock market, you must have the thirst for knowledge. Mark Minervini reads an incredible amount of investment books, and he will study and model how these great investors and traders approach the stock market and how they created and executed trading strategies and developed the emotional discipline to follow their models. So take note what he mentioned over here. He did not only mention study and model the great investors and traders. That is just the first part of the equation. The second part of the equation is equally, if not more important, and that is to develop the emotional discipline to follow their models. Many investors and traders in the stock market tend to style drift with their investing and trading. What this means is that they will tend to move from one trading style to another and not giving enough time and practice to fully master any one strategy. And that is why they are unsuccessful and unprofitable in the stock market. Mark Minervini believes that in order to succeed, we not only have to study and model these investors and traders, but we also have to have the emotional discipline to stick and to follow their models. And he also mentions that the only way we can accumulate experience is by taking action and producing results and then learning from these results whether they are good or bad. In fact, he believes that bad results are the ones that give us the most learning points. That is my Trade Like a Stock Market Research Summary by Mark Minervini. In this video, I've ran through with you some of Mark Minervini's trading strategy, such as Mark Minervini's trend template and Mark Minervini's SEPA strategy, and some of the tips and advices that Mark Minervini gives to us as traders in the stock market. If you have liked and learned something from this video, smash that like button because it will really help the channel grow and allow me to produce more content such as this. And if you haven't already subscribed to this channel, make sure you do because each week I release one new video about investing, trading, and the stock market. I'll see you in those other videos. To your financial success.